Good afternoon, ladies and gentlemen. Thank you for joining us today for this Kapronasia ViewTrade session on the empowerment of the Asian retail investor. My name is Joe Jelinek, and I'll be your moderator today. Just before we get started, some general housekeeping. We'll be taking questions throughout the session today, and we'll try to get to as many as we can. Please use the Q&A functionality within the platform to ask your questions. We have a great lineup of panelists today, so without further ado, I will let them introduce themselves. Darren, perhaps we can start with you.
Thanks, Joe. Hi, everyone. So my name is Darren Lee. I am product owner of Wealth and Trading in Revolut, and I've been living in Singapore for the last couple of months. And within Revolut, I head up the engagement team, so focusing on UX UI within Revolut.
Fantastic. Thank you very much, Darren. And Andy, let's come to you next.
Hi, everyone. This is Andy from ViewTrade. I'm the regional manager and cover Asia business. So I've been serving retail brokerage in Hong Kong, Taiwan, Singapore, and some new country in the region. Thank you, Joe, for having me.
Thank you, Andy. And Juno.
Good morning, everybody. Actually, it should be good afternoon because I'm based in London. I'm from Sinopac Securities with our headquarters in Taiwan. Invest in the Greater China market, focus on Taiwan.
Thank you. And Ronit, if we could come to you next.
Cool. Good afternoon, ladies and gentlemen. Great to catch up with all of you over here, and very good afternoon to my fellow panelists as well. Joe, thank you so much for hosting us. So my name is Ronit. I head the cross-border investing business at Grow. So we are a fintech platform that provides financial services to customers based out of India. And I typically look at the business side and the growth side of cross-border investments, mainly focusing on enabling Indian customers to invest in US market and beyond. So yeah.
Great. Thank you very much, Ronit. Right, well, so let's dive straight into the questions. Darren, let's start with you. What do you think are the key drivers behind the rise of the Asian retail investor?
Good question, Joe. So it's interesting. Retail investing has really kicked up over the last 3, 4, 5 years, and a big, catalyst for that, I would say, was COVID, was the pandemic, when people were at home. They had a bit more time on their hands, a bit more discretionary money available, and when they were at home, they were looking for a lot of things to do. That's where trading really picked up during that period, and people started to dip their toe into it. And of course, their first early intro into it led to needing further education and kind of going down and learning more on the different aspects. But that really opened up people's eyes to it, really their kind of opportunity to it, I guess, in the very beginning. And many different brokers, bloomed during that era back in 2018, 2019, coming onto the scene. And now it's kind of at the stage whereby 2023, the maturity of the industry is taking it a step further. And now we have some, bigger players that are coming through, developing products, developing features for users, not just to get, their early entry point into trading, but develop, stay in the industry, enjoy their experience, and actually learn a lot more. So I think we're seeing year on year overgrowth, especially from, I say, about 4 years ago. And now, even though markets have turned, even though the economy has taken a slight dip, there still is a lot of engagement for users, and users are wanting to seek out great platforms, great UX, great experience for investors.
Yes. Thank you very much, Darren. And Andy, perhaps we could turn to you next then. When we look at the characteristics of Asian retail investors, I mean, are they all the same, or would you say there were distinct archetypes that exist? And then how are these archetypes proportioned, do you think, across the markets?
Right, Joe. I would say not all the same. So in fact, in Asia, because the financial development background, population growth, so Asia is quite diversified in this context. For example, that Japan is relative controlled by a senior investor, but a country like Malaysia, Indonesia, Thailand, China, they are relatively younger generation. And I would say, like in Singapore, Hong Kong, Taiwan is relative like more maybe like in the middle. Yeah.
Yeah. I mean, I think you're right. I think probably you'll find that it's in the more developed markets with slightly aging populations. Perhaps maybe the retail investor there will be certainly different in terms of their needs and requirements than in the big sort of younger emerging markets like Indonesia, I would imagine. Great. Well, Gino, let's come to you then. So, if archetypes of Asian retail investors are, vary across markets, what about time? How would you say that Asian retail investor demographics have changed over time? Sorry, Gino, you're on mute.
Okay. We see the rise in the number of the younger retail investors actually correlated with the growth of the retail investor segment, more generally a global phenomenon, not just an Asia phenomenon. Both are the result of the easier market access brought on by technology. With the advent of the internet, smartphone, digital transformation, low-cost digital online trading platforms, and social media communication channels for sharing information. For example, 2 years ago, in 2021, over 12 million population in Taiwan opened a trading account out of a population of close to 24 million in Taiwan. That means half of the Taiwanese population is now in the market. And just before 2019, which is 3 years ago, our average retail investor age was about 45 years old. Over the past 2 years, we have added more than 300,000 clients that has average age has fallen to around 30 to 35 years old, which is around 40% of our client basis. So you can see the change of the demographics in the market.
Yes, I mean, I think this is what I've been hearing as well, that the segments have got there is a bigger, younger segment now. I mean, would everyone agree with that here, that investors or retail investors are getting younger? There has been growth of the younger segment.
Yeah, for sure. So in the context of across the globe, especially even in Asia itself, the fact that the applications are becoming smoother, they're better well designed, it leads to a younger population who do need that frictionless support to come in and actually start adopting these applications. And then obviously with rise of social media, that's driven a big kind of rise to a younger population coming in. And I think a main component from this is the fact that every stock and share these days are fractional. So before, you had to come and buy your Berkshire Hathaway share for $500 or whatever, or $5,000, should I say. Whereas now, because it's fractionalized, we get the instance whereby anyone can get easy access to the markets. Now, we'll discuss the ramifications of that as a result, but because of the fact that there's low barriers to entry, a lot of applications can be sprung up pretty quickly, and users can come in and quite use it, which is great for the user. It's the definition of democratizing. That's actually the definition of it. But now with that, there's obviously there's a caveat, of course, that we can discuss later on. But what's interesting is the fact that the demographic has completely shifted. So even in aging demographics like Japan, or even in Singapore, where we'd have higher net worth investors later on in their career, that has kind of flipped. And now we can see a younger proportion of users, even in their mid-20s, who are able to learn, adapt, and try to actually develop their interest in investing and trading.
Yes, thank you so much, Darren. And Darren, actually, maybe just sticking with you for 1 second there. I mean, in terms of the drivers of this for younger retailers, I mean, why do you think they are suddenly more interested in investing? Is there something, apart from sort of maybe the interfaces they can interact with, is there anything else you think suddenly spurred them on?
It's definitely the fractional reserve aspect, that they're able to invest from $1 forward or whatever. They're able to invest whatever whatever, maybe small proportion of their salary that they have in excess. So before, when we had high interest rates, back in the day, before I was even born, we had 15-20% even in the UK or across Asia interest rates. So you were able to save money just in the bank. Whereas now, as a result of pretty much zero interest rates for a period of over a decade, we now have the opportunity to go into the markets. And of course, over the last 3 years, there was a bull run, which led to a lot of interest from people, and they come in through that essentially. That's their entry point to this, and that gave them a good entrance into it. I think for a long time, a lot of the stars aligned, which is why people wanted to take the first step to start their investing journey.
Yes, yes. Thank you, Darren. And I think I definitely would agree with that. And what about you, Andy? I mean, again, I imagine you've also been seeing the segment getting a lot younger.
Yeah,
Andy?
I think so. Yeah, so we are seeing like more and more like this younger generation join into the market. So as Juno just mentioned, like in Taiwan. So I also share like the same experience in Hong Kong, and even Singapore was before a little bit like quiet, but for the last like 2 years, we are seeing like more and more this kind of ecosystem player in this region. So I would say yes, yeah, definitely.
Great, great. Thank you, Andy. And Ronnie, I'd like to come to you next and to have a look at perhaps look at the India market. Now, obviously, we are in agreement that retail investors have got younger vis-a-vis the older segments. But how important is the younger retail investor segment for retail brokerages?
Right. So the way I see it is, retail investors, especially the younger investors, bring in fresh cash. They bring in fresh money in the market, right? So you have the Gen X, you have the baby boomers over there. They are the cash cows at the end of a business, if you look at, right? So the demand or the product cycle is different from a guy who is like 35 or 40 plus years of age versus a younger guy who's like 18, just started off his high school, college life, and then just about to enter a job, right? So that is the actual, retail segment of influx that we have seen. And by offering products that give seamless experience, just taking out a few lines from Darren's discussion. Seamless products and user journey does make a difference, especially at a retail level, because we live in a time where people are DIY. Most of the time people are DIY. They prefer handling their own investments. They prefer looking at the screen, looking at the app. That's where most of the population lies, looking at the app, looking at the numbers, looking how the market is going, looking at the products. It's just not about stocks. It's just not about FNOs. It's just not about US stocks, global stocks, funds, etc. So it's about having products that suits my appetite. So if a retail investor gets access to such kind of products, which can have a ticket size anywhere starting from $10, $100 to all the way to $100,000 to a couple $1 million, whatever it can be. And of course, fractionality included in that overall segment is a high value proposition for any fintech players, right? So you are offering your products to a wider range of segment, wider range of users, which are typically diversified, right? Everybody has their own appetite, and you are serving people as per their appetite. And retailers over the past 1 decade, I would say, post 2000 or 2003, there has been significant rise in the Indian retail segment, at least what we have seen. The number of trading accounts that has been opened, the number of trades, the average transaction per trade, the volume that we see on the exchange level, and the demand for further classification or diversification beyond the markets is like an advancement, right? So every new guy is using products one way or the other in their life and would like to own shares of those products, or would like to, become or diversify rather the risk from between one market to another, and have a more diversified goal-based approach. So this is where this is again a process, or this is again an area where we feel that retailers have been booming up. Retailers have started knowing, understanding about the market, reading a lot. So financial literacy and financial inclusion, two biggest part that that pushes. It's a big mode of push for any first-time investors, or to become that semi-investor, from raising a scale from a passive investor to a more active investor scale. So yeah, that's how we see it.
Okay, and Roland, maybe just quickly speaking with you, and I might actually ask the rest of the panelists this. So we wrote a report with ViewTrade on the empowerment of the retail investor in Asia. And one of the findings that we found was, whilst the younger segment has grown rapidly, it is still those older segments today that are contributing proportionally the most to the top line of retail brokerages relative to the younger segment. But nevertheless, the younger segment strategically is very important, because down the line, over the next sort of 10, 15 years, as these guys get older and sort of more into their jobs, they will then start to have obviously more disposable income to invest. Would you say that's true?
I would say yes. I would say yes. I wouldn't rule out it 100%, but yes, I would say yes, that is a theory. That is a concept. The reason being, of course, every investor goes through a phase of cycle. Right now, what my risk taking appetite would be for any investment might not be like 10, 15 years down the line or 20 years down the line. I might be cash cow like 15 years down the line, just investing heavily on, on passive funds at a larger ticket size, versus right now, I might take a loss and I might, do investment again, because I know there is a market over there. I know, it's a cyclic process. And that risk-taking appetite is there with me, right? And having said that, from a business perspective, if we see churn, every churn that occurs should always be offsetted with new or fresh investments, right? So it should not be like you just make loss or you get off the market. There's always someone else, or if 1:2 or 1:5, whatever the ratio is. So there's fresh investments happening. So yes, so to answer that question, yeah, right now, what appetite investor might be, right? It would be more diversified. I'd be more risk taking. Right now, I might not be a cash cow, and I might not be contributing to that higher ticket of brokerage as a revenue, or AUM as a revenue to a broker or to an AMC or to any fund. But yes, as I grow older, probably after 40, 45 plus, the risk-taking ability reduces, because you're thinking about retirement, right? And when you think about retirement, you would like to park, again, depending upon customer, investor to investor, at least 35 to 40%, or at least 50% at times, in a more safer asset, safer bets. At times people also do like 60%, right? And then remaining, you can just have more diversified. So that churn is very different than this early investor churn. So hence, yes, right, the investor right now is also very important, because this 10, 15 years will give him the timeline to learn, understand, grow in the stock market, or in the investing market, whatever he has. So he has learned that, okay, these are the things that I need to do before I make an investment decision. So I should, go ahead and approach an advisor, or etc., depending upon my ability to analyze for long term, right? So if I'm playing for short term, of course, I'll use advanced matrices, fundamentals, etc. Come to platforms, talk to people, marketplace as a junction of investment, and then take a decision, of course. So when again 15 years down the line, I'm going to be very passive. Give it to some fund manager, account manager, like, here's the ticket size, whatever the AMCs, whatever your management fees, take it, keep on churning. This is what I expect. This is what this is on top of my principal amount. This is what return I'm expecting, and there you go.
Yeah, fantastic. And I mean, I don't know, does anyone else want to come in at this point, and does anyone have anything to add? Okay, no worries. Darren, let's come to you next then. What markets and asset classes are Asian retail investors looking to invest in? So, if we look at the evolution over time, how has this changed over time in terms of what Asian retail investors are looking at?
So I think with the development of the apps that have popped up, so the ones that are leading the way, the major emphasis is on US equities. Generally, is the fact that we do want access to US equities. So these could be your top 100 stocks or whatever, because generally most liquid, biggest market caps, blue chip stocks, is generally that's the way it goes. But of course, in recent years, the rise of funds have just really taken off as well. So you do see big access to either it could be an S&P fund, it could be all US market, or it could be global. So this is where we have the optionality, because with ETFs, you're able to get full access to whether it's commodities, whether it is a UK market, whether it's a global market, or even emerging markets, which is really good because, of course, ETFs offer the element of diversification to a certain degree. We don't carry the same single stock exposure. So it gives users who, as Ronald was saying, are on that learning curve, the reduced single stock exposure risk, which is really, really helpful. So we do have those as two dominant trends. And I think for most retail investors, that's where the kind of the line stops, and a lot of the applications will provide that that access. Now, of course, there's commodities markets which people want to invest in, but they're not as used as frequently as, let's say, the major US equities market or whatnot. But it's important to say as well about, from a younger perspective, or even people that are from the 20s right up to 35s, that the rise of crypto as well has definitely spurted on this. I feel that it's a big catalyst for younger people getting involved in the whole space, because crypto is something that's came along. Of course, it's been scrutinized from different reasons, but the fact that people want exposure to it is important. It's important from a platform build perspective, from a regulation perspective. It's important from multiple different aspects. But the fact that people want access to it means that a lot of platforms will build around it. So we do see that kind of rise, and I feel like that even in economic downturns, which we are in now, and we've had 2 consecutive quarters of negative GDP growth, people in time will come back to it, and it will come back again, and will start sprouting on again. So I feel like that asset class is more certainly not going away. And I feel like that out of the 1,500 tokens that have been there, there's argument that a lot of them the projects will fail and the new rise will come, but we will have the dominant players that will be consistently in demand, let's say, as we move forward. So we do see the big driving factors of the major US markets and funds, but it's not to forget about crypto that's coming up behind everything else.
Yeah, no, Darren, I think those are great points, and certainly, well, prior to the big blow up that we saw with FTX, I know Asia was very big in crypto, and obviously some of those emerging markets like Vietnam and even Indonesia was very big there. I don't know, would anyone else like to sort of add anything here in terms of markets and asset classes? Okay, Gino, maybe we come to you next. Look, from Sinopac's perspective, what do you think Asian retail investors are looking for from their brokerage in terms of tools and functions? And how do you think that has changed over time?
Okay, yeah. I think tools, of course, everything moved to technology. So you can see that online trend and also AI trend. Over the last 10 years, the shift to online, you can see, have been very drastic. The shift to the smartphone has been even more so. So until 3 years ago, only 3 generated from the online digital platform. Today, that number is 80%, or even more dramatic turns of events. The client right now, they use mobile is around 95%. So you can see the change over the time. And also we notice that AI is also important to generate more business and helping the client for monitoring purposes. I think AI can help to flag and monitor our clients' trading behavior. For example, Sinopac, we won the prize in 2021 for our AI investor advisory platform. Our AI platform actually monitors stock and alert customer whenever there's good news or bad news related to the stock. And we use a neutral language processing to get information from the market and send to clients. So I think this is the moving on that online AI. We can see that is the function which is quite important to serve the clients in Taiwan especially.
Yes. Andy, would you agree with that? What's Gino was saying about tools and functions?
Yeah, I think I share the same, agree with Juno about it. So for the younger generation, especially, they would like to have some tools, functions to find out a reason by themselves. So they are not just want to answer. They are kind of more want to know the answer by themselves, or maybe if they get an answer, they want to verify by themselves. So this is something we are seeing the trend here in Taiwan, I would say Hong Kong, and other regions. Yeah.
Yes.
I would just add to that as
Yeah,
well.
yeah.
Sorry, Joe, just to add to that as well. I think, a lot of platforms at the moment as well do a great job in terms of charting tools. So a lot of them are either API functions or whatnot. But, for basic investors, when they go through from the very early stages and move into more of an intermediate stage, the available information we have online, whether it's charting tools or any sort of back testing that people can use, when they're ready to move into the next stage, the ease of information that's there right now, if you compare it to trading in the 90s, is quite drastic. It's a lot of it was done based on intuition back in the day, whereas now we have a lot of indicators that can help a lot of people guide themselves in the right direction. And the feedback loop is so fast that you are able to learn and adapt pretty quickly and make assessments and make judgments based on that, which is very, very powerful. So as Gino was saying, you could use an AI tool, which is very, very helpful. But for people who are just getting off the ground as well, they can take maybe the responsibility themselves, learn some of the basics, and a lot of the platforms can build this very, very visually and make it quite easy to scale up to over time.
Yeah. And yeah, no, I think that's absolutely right. And Ron, what about you? I mean, what do you think? What are you seeing from your customers in terms of the tools and functions they're asking for?
So I think we're on a very similar turf as well. The advancement of intelligence, the ease of digesting data and then putting it in front of the customer so that they can at least make some sense to it, right? It's not that you're just giving hard-coded data. You're giving some advanced chart without telling them, okay, how this works, or you're giving some advanced indicators without telling them how to use it. So easement of analytics in investment based on tested data, historic tested data, is something that definitely helps. The other thing what I would add on is we also see that the hedge fund level analytics, so only the big fund managers, the top investment fund houses would have access to it, and they have developed this kind of technology. So, because obviously there's a lot of risk to return in that segment. So those kind of intelligence, when it is more dissected and brought down into simpler signals for retail customers, so that is very helpful as long as you educate them how to use it. And sometimes if it's just simply and it works as an indicator, might not be taken as an advisory tool, might not be taken as a wealth guidance tool, but as a decision making or a decision contributing indicator, then that certainly is a bigger segment of bigger segment for people to come in, bring in new orders, bringing new investments in the market.
Yes, I totally agree. I think anything that can really help these investors make their decisions easier, facilitate those, then so much the better, I guess, for them. Andy, maybe we can come to you again. Look, would you say that there is a difference in how younger retail investors expect to be served over their older counterparts? And if so, what do you think that difference is?
Right, definitely that they would be want to serve different than their older counterpart. Yes. So the younger a retail investor, I think they are not just asking the mobile interface. they may want to sound like instant, quick, like a response, but more important, just like I mentioned, they want to find the answer by themselves. So, for example, we are seeing a broker in Hong Kong. Kind of surprised to me, when they say they are launching their trading service with us, they have like a trainer course along with the grand launch. So they were telling me like along the courses, the student will use the tool to learn, to trade, to invest by themselves. So we don't see like they open this kind of a grand launch to all the investors. They kind of target like small, like more educated, or like maybe like a investor they are learning on the way. So you will see like they will trade a little bit like starting gradually from the course. So they learn it from the course, but they want to analyze by themselves, find the answer to trade, to invest, and they want to control like their investment result. So this is what we see. Like the some younger generation, they expect to be served like differently. Yeah.
Yes, and I imagine obviously today younger generation being so much more digitally savvy than some of the older generations. They sort of want in their trading apps, I guess, similar to what they get from their other apps that they use in their day-to-day lives. So Darren, maybe it's a sort of similar question, really, but what do you think are the implications for brokerages in terms of what they need to do to effectively serve the younger Asian retail investors?
Yeah, and it's quite similar to what we're discussing, but I think just at a deeper level. So the responsibility of a broker, of a platform, should be to help a user to clearly understand some basic principles. One, to understand like a stock profile, to understand an overview of a stock, how that works logically, how is price determined, how are the statistics determined, how are any sort of like ratings or research papers that are applying to that stock, how does that come true? So that's baked into the UX UI, and it's very, very clear then. Same with the actual user journey itself. So in terms of order flow, if I'm going to buy whatever stock, I should clearly know how that's happening. So whether it is in shares, is it denominated in dollars, is it being converted to euro because I'm trading on a European exchange? These are some basic principles that have to be in place, and these are the nuts and bolts. Same with the analytics aspect. So as you go through looking at your portfolio size, your profit and loss, your overall return, being able to clearly digest this to a user is very, very critical, because you never want trading is complicated enough as it is, so you don't want a gap between what's actually apparent, which you do find sometimes in much more advanced trading platforms that can show up at times. So we need to break that down very simply. Now, of course, as I discussed at the very beginning, we've seen an influx of retail traders, which is positive, and it comes with a couple of caveats. The caveat to that is the rise of any sort of social media means misinformation can be spread largely. So whether that is, pumping a stock or just groupthink or any other information that doesn't actually necessarily help a user. Therefore, the onus is on the platform to educate users. So trading courses, guides, tutorials, very, very important. Understanding basic principles: what's a stop loss, what's a limit order, what's a market order, what's the implications of doing one over the other, and being able to break that down logically, and also having some aspects of like a glossary so that users can go back. So it's quite interesting if you look at UX UI design, and if we're trying to get, let's say, the best bid offer for a stock, some users may not know the difference between bid and ask, which is completely fine. They weren't necessarily told to know the difference between that. But therefore, the responsibility is with the platform to be able to provide that clear information. Do we have sufficient information icons? Do we have sufficient FAQs? Just because you don't want just basic principles that we think is basic, which is the fear of granted knowledge, to be passed on to the user, and therefore they're not able to use the platform. So that's where we can lead to gaps. We can lead to issues with trading of users, doing things that necessarily they thought was quite different. So very, very basic. And I think the depth of courses can start quite bland to begin with, basics of stocks, trading, putting on orders, and go deeper down to understand how to interpret financial data, how to interpret news, how to not take news as as the be all and end all for particular stocks. And as a user, once they're going through and learning more, they will become more engrossed in the process and realize that they need to invest more time into their education, because then it comes back to benefit them. And if they don't, well, then we can often see negative returns as a result. So it's a combination of both.
Yes, yes, I totally agree. And I think that's great that providers are now thinking about that sort of education aspect as you talk about. I don't know, I mean, if anyone else wants to come in at this point as well, does anyone want to add anything to what Darren has just said?
Yeah, I think the content is quite important. In Taiwan, content, we try to improve our content, especially in Taiwan, we need Chinese. If the content is not in Chinese, maybe the retail investor, they were difficult to absorb the information. So I think content is very important. Yes.
That's a good point, Gino. Yeah, I mean, I've heard this as well. And again, the research we did for the paper that we wrote, that you kind of take for granted that everything's in English, but obviously language is going to be very important here. So I think that's a great point. Okay, well, Ron, maybe let's come to you next, if I may. I mean, it'd be interesting to hear, what do you think in terms of the Indian retail investor behavior? And is it different, do you think, versus, retail investors in other markets, would you say?
So I would say that it does have a similar behavior of an emerging market, right? So because the market is growing, you see new investors coming up every day, quarter growth or year-on-year growth. On the other side, what I've seen so far from my perception in the Indian segment is that people are getting very, curious. The learning aspect has taken a very big role. So even it's an upfront. It's a very being upfront kind of game where there's intent. There is very high level of intent. Now, where should I first start my investment with, or where should I scale my investment with? Let me understand how it works. Let me talk to some people who have been there. Let me read some journals, content like we have been talking about, right? So the curiosity level of investment, especially in younger generation retail aspect, has increased, and this has been also a contributing factor in the overall growth of the retail segment, right? And fintechs, primarily some of the leading fintechs have been very, at the front foot in catering to such kind of education levels as well, educating people, educating investors, like how to start investing. No, it's not about what to invest, where to invest. It's basically how to invest and why to invest, right? The importance of investment. It can be across any asset classes. So that is very important. And that has also lead to, college goers. I will not be surprised. I've seen school kids like who are, high school kids getting pocket money and then at least buying one share of whatever is available to them via one way or the other, at least in some kind of whatever investment is available to them. So that is the kind of influence that we have seen, and it is very motivating also, right? Especially in a market where you have a democratized product platforms, you have democratized instruments, you have diversification instruments, you have access to multi-layer instruments, being sitting in a country just from the access of your mobile phone. You have the access now. In order to start, click on that first yes button or go button, I just need one additional layer of comfortness. This is what I'm going to do, or let me start off with this, right? And whatever I'm starting, let me read about it, let me understand about it. Few people will just invest in the cash. Of course, these are like again, age group to age group, income group to income group. So most people or some of the people would directly start away with cash, invest. Even if they're burning cash, it's fine. They're learning in the process of burning, and hence again contributing. More younger guys who are, who are kind of restricted in that cash flow, they'll do their research. They'll at least understand the basic. Nobody's going to understand like, the advanced part of it unless you get into the game. You are inside that network, you are listening to a podcast, learning about advancements of the market, how to read it, etc., etc. So at least to start that go button, whatever pre-checks that needs to be done, whatever the pre-information or whatever is pre-necessity, that thing has to play a critical role. And that's what we have seen over here as well, right? So I've seen education at a pre-investment, before I start my investment, about, people learning about the stocks. They know about the stock, they know about the company, but they would like to understand how the market, how the market structure works, how is my shares held, how is the execution happening? And of course, data is there, of course, that's a inclusive set. So this is, I'm sure in other emerging markets, it is something very similar pattern as well. Right, people would like to know about how the market is operating, and should I invest, when should I invest, how should I invest, right, what I should invest, and all those things. Like, it will come at a later stage. So why and how, these are the two major questions that people, that drives any investor to start their first journey investing. So
So yes, no, you're absolutely right. And I think that learning development, that curve is very important, and it's something that obviously brokerages can help a lot there. Gino, maybe come to you next. What restrictions and challenges remain, do you think, in serving Asian retail investors?
I feel the restrictions and challenges are mainly from product restraint and to tighten regulation. On the product side, we have seen a very significant proportion of the young retail investor now trading foreign market, in Taiwan especially, with a high concentration, like Darren said, in US over the past 2 years, because I think the growth in there. In Taiwan, most of the clients do equity trading are often looking for leverage. So a lot of our clients ask whether Sinopec can do stock lending or margin trading in US shares, which currently is not allowed. And also younger retail investor, they are likely to be interested in a diversified portfolio with a higher risk parameters. For example, crypto, like Darren said before. A lot of the retail investors in Taiwan actually, they are trading.
Oh. So sorry, Gino, you're breaking up there. Hello. Okay, looks like we've lost Gino. Does anyone else, whilst we're waiting for Gino to come back, does anyone else want to add anything in terms of restrictions and challenges that are still remaining in terms of serving?
So Joe, maybe I take this, right? So in Taiwan, there's like a regulator. They are seeing like a more and more growing on the trading on the US market. So used before in the past that the regulator, they just like look at all the data on brokers, so they don't really want to get involved. But those like position trading is like getting larger and larger. So the regulator, before my understanding is that before they want to like give it like a more margin trading, like a more like a new business to the brokers, to the like ecosystem player, they would like to see if they can do something to make sure like a risk can be controlled. So I think this is something that, I mean, we are all facing this, not just like is it established player or startup. We are all facing like a regulator. They even though they want you to like innovate to benefit for the customer, but they still want to like the risk can be controlled. So this is something we are facing, I would say, emerging market or like in Asia, especially for the regulator, they don't really understand US market. So this is something that we always not maybe just like Ronnie said, not just educate the investor, we may also provide the material to educate our regulator. Yeah.
Yeah, I mean, I think that's a good point. I think it's always difficult, isn't it, for regulators? They're treading that sort of fine line between, on the one hand, enabling innovation, but on the other hand, trying to protect consumers. So, yeah. Darren, maybe we can come to you again. I mean, would you say that there were still some gaps in terms of the current offerings for Asian retail investors? And then if so, what would you say those gaps are, do you think?
Yeah, I think it mainly could be around facilitating around other areas of Asia. So we have large markets in Singapore, Hong Kong, China, Taiwan, but the neighboring countries, Thailand, Vietnam, Cambodia, Myanmar, those areas are traditionally quite underserved because they're being utilized from brokers that are based in Singapore. So being able to offer the same level of services that we plan to offer, that should be the goal, so that it's it's equal playing field across there. We just need to have the pillars in place so that the platforms can be actually built in such a way that KYC's passed, everything's onboarded, and then these countries are able to be served. So therefore, if there is a demand for US equities, we're able to give that access. That's the goal, I would say. Of course, there's education around that. There's the risk of users not being up to scratch with it, but the fact that these platforms do want access, maybe we need to have bigger players that actually service them, but hopefully that can be passported from Singapore or whatever location, so that each country will be able to get easy access. Now, there was an important point earlier about language. I think what's really important here is aspects to be localized. I think that the language that should be used should be, of course, curtailed towards, if it's in Thai, if it's in Vietnamese, we need to be able to give users clear understanding, clear insight into what are their requirements that they need. Very basic things like pattern day trading, understanding these different things, why it can't be allowed on certain platforms, how does that work if we're going to use a US execution broker, just very, very basic things. But I think that's a longer roadmap for countries to be able to adapt to and see the benefit for their citizens and users of the platforms.
Yeah, no, completely agree. And I think that localization element is an important one, as is the access. What about Ronit or Andy? Do you guys have any input here in terms of the gaps that you think are still there? Or?
So, I just see it as if there's a challenge, then there's also an opportunity. Of course, the timelines and everything are also inclined to it, right? So every country has its own regulations, be it KYC, AML, whatever that we figured out, right? And of course, when you are talking about diversification, you're opening accounts across, you're opening accounts from one jurisdiction to another jurisdiction, right? So are these two jurisdiction regulators, talking to each other, or do they have that synergies that enable such investments or such products to come out, rather, if you look at that way. So net, most of the emerging markets are connected with these stable markets one way or the other, and the regulations. Of course, there are tweaks in the regulations that will help. I'm sure they are the regulator for a reason, because they know, that these are the things that needs to be addressed before such kind of mechanisms are in place, and that check is very important, right? So we want to be, or rather, I'm sure everybody wants to be in a business, especially in the cross-border space where it is regulated, it is regulatory blessed, and so it's not in the gray zone, and whoever the end customers are investing with ease. And of course, then you have the product ease of investments. You have your vendors across the world, be it in the US, be it any other part of Asia. You work with them, create this one interface where you can access multidimensional products across one account, or however it works. I'm just thinking out loud, right? In the same way, along with the regulatory process in place, the regulations blessing you in order to do that business. So yeah, there will be challenges, but I feel if we are able to move it along with the regulators, it might take another, whatever the anticipated time could be based upon geography to geography, even if it's taking like a couple of months up and down. It's still fair enough to invest that time, right, and make it a more green way of investment in this connected network. That's how I see it.
Yes, thank you very much, Ron. And Gino, we've got you back now. That's great.
Yeah, sorry.
Sorry. You sort of cut off. Did you want to finish?
Yes, I think I just mentioned about the tight regulation in Taiwan, because there's still a lot of things that we are waiting for the regulator to relax. For example, in Taiwan, only future brokers are licensed to offer the CFD contract for difference. If the regulator would relax this regulation to allow the security houses to do the CFD trades, that would be a huge help for us. So I think we are just waiting for the regulator to relax. And also on the crypto side, which our financial institution in Taiwan is not allowed to offer these services. So I mean, the product side and also the regulator side, which is what we feel the challenges from our business viewpoint.
Got it. That's great. Thank you so much, Gino. Actually, Ron, if you don't mind coming back to you again. Looking at competition, because obviously competition is now heating up. We're reading a lot about that. I mean, in terms of your competition, what do you think is the threat, and how is Grow positioned to guard against that?
So personally, I don't think of competition as an actually competition. It's like enabling, right? It comes down to the experience that you're building. So any platforms who is whichever platform is offering super smooth customer experience with great products, connectivity, is there for a good reason, and it is good to have them, right? If you're just the sole player, it's not worth it, right? And you have so many questions then here and there. So I personally take competition as on a very positive side. It actually helps me to think beyond, right? What best can I do for my customers? What is the advancement level that I can gain? If there are industry pattern that can be more synchronized by offering a more better, synergized process in offering to my customers, then that is what will help in building an overall automation of entire process, right? We always think of automation. Everything should be automated. Everything should be seamless, right? Seamless is probably is the next word or the proverb for automation. So that is how I see it. And I'm sure most of the fintech, be it in India or outside of India, think on a very similar term, right? You try to build a platform, or you try to build a interface that has super solid product, that has super smooth customer experience. Let it be, even if there are like 50 others or 100 others customer base, or platforms over there who are competing in the same segment, but you still have users, right? Even if you can make one reason for the customer that yes, this is a great platform, amazing trust, safety is there, and that and of course diversification, product enhancement, all those things are there, and they give me super smooth support as well, right? It's not just sales, it is like post sales as well, right? You onboard a customer, post is so there are two journeys, like pre-onboarding and post-onboarding. His pre-onboarding journey has been smooth about understanding what the platform is, how it works, what are the features I get, safety, etc. Now I onboard. Now post that, the journey goes on. I start my investments. Now after my investment has been done, the support that I get from the platform, that is also very key contributing factor. So all these small nitty-gritties make up to build a better brand influence for any platform over there. And that's how I feel the USPs are defined in the market. Your competitors might have that USP, might not have that USP, whoever it is, right? So that's again my personal perception, that's how I see it, that build super smooth interfaces that gives good businesses, and build USPs that actually help you in retaining customers at the end of the day, getting new customers and retain them, give them what they need. And that's how you do it.
Fantastic. I think you've done very well then in looking at the important sort of ingredients to this, in terms of how you you serve the retail investor. And actually, that's my next question. Do you know, I'm going to come back to you again. What are the key things to get right, do you think, when serving the Asian retail investor?
Yes, I think just we said in this few person regarding the trend technology. I think the speed is very important. The customer right now, they expect everything to happen in a real time, and will not tolerate a process that to take longer than a few minutes. I think technology investment on the technology, fintech, everybody said fintech is one of the key tool we need to provide. And of course, content, education on the content. Like in Taiwan, we try to build up the content. A lot of the content need to be in Chinese too. So that's we are trying. And also the innovation of the products. For example, in Taiwan, actually, we noticed that the top one most popular products in Taiwan in last year is a ETF. It's very interesting. ETF as a high dividend yield play ETF, which is most popular top one products in Taiwan. So we need to follow the customer's interest, and we use the AI as a tool to know about investors' behavior. So I think speed, online AI contents, this is what we need to continue to invest to serve the investor.
That's a great summary. Thank you very much. Would anyone else like to come in here in terms of what do we need to get right to serve the Asian retail investor? Okay, so look, we're kind of coming up on the hour here. So Andy, maybe last question to you. What do you think retail brokerages should be doing now and in the future to provide value to their Asian retail investor customers?
Gotcha. So I would say the retail brokerage today, they should understand their customer first. They should do their customer segregation. And also we are seeing that some customer, the number is like a relative very few, but they are very smart. So they would like the product, maybe some products like across the border. So Juno just mentioned about ETF is like very popular right now in Asia. So we are also seeing like some ETF provider, they provide a product not on the US market. They provide the product on the UK. So some of like tax regulation, they have some benefit for some kind of maybe higher withholding tax rate resident. So we are seeing this like a smart customer, they are chasing the retail brokerage to become like a system-wise like better, or like a product could be like a more across the border very easy. So I would say there is like lots of unmet demand, and this, even though this is like a smaller demand, but turns out this kind of a small demand, like a small population, not small population, small amount, fractional trading, like this population, they could become like a very huge. And we just touched on the subject about this younger generation, they will become senior, become older. So they will control more wealth in the future, right? So this is something we are seeing now. And also we seeing some example, especially in Singapore, that even though fractional share is already a little bit popular in Asia, but some retail brokerage in Singapore, they are more targeted and like help their customer to compound their investment return, but they don't want a fractional share. They still have like an investor in there, like maybe 35, 45. They are accumulating their like income, but they want to reinvest. So those investor, they are not like a small retail investor. They are like they already have some asset, right? So they still want to compound their interest. So I think this is something that we are seeing like a dividend reinvestment program. Used before, we only consider this as like fractional to compound those shares with like shares under one share, but we see like a little bit different demand, right? And as we also mentioned, like if you target like a younger generation, the tools, the function, the content is very important. But no matter which kind of customer, I guess like keep it like very simple on the interface is very important.
Yeah, no, I think those are some great points, Andy. And I mean, look, we are on the hour, but would anyone else just quickly like to do a final, sort of say something about what they think brokerages should be doing now and in the future? No? Okay. All right. Well, no, that's fine. Great. Well, look, I'd like to, well, we are on the hour. I'd like to just now finish by thanking all my panelists today for your great insight. Thank you very much. It's been a really good session, I think, and we've definitely learned a lot more. Well, I certainly have, about Asian retail investors and how to service them going forwards. So thank you all very much. Just before we end today, just a few, a little bit more housekeeping. We have recently published a report, as I mentioned, with ViewTrade on the empowerment of the Asian retail investor. That can be freely downloaded from our website. We will also be sending attendees of today's panel a link to download the report after this session, as well as a link to the recording, which will also be uploaded to our website shortly and will be available to view on demand. We have gotten a lot of questions from the audience in the background. Unfortunately, we were not able to get to all of these, but if you have asked a question that we were not able to get to, we will follow up with you via email. And I would just like to end by saying, again, thank you to the panelists today for providing us with such great insights, and to everyone that joined the session today on the empowerment of the Asian retail investor. So enjoy the rest of your day, everyone, and thank you very much for joining. Thank you.
Thank
Bye.
you. Bye.
Thank you.
Bye.
Bye-bye.
Thank you. Bye.
Bye.
Bye.